There are several names across the tech, media, and telco space in particular that could see big moves depending on the outcome. One of those groups is the gig stocks like Uber. That was our mystery chart. And our guest here says something Kamala Harris did in 2020 could pose risk for the sector if she gets elected. Let's bring in Paul Gallant. He's a managing director and TMT policy analyst at TD Cowen. Paul, welcome to you. And this goes back to the classification of workers. Is that right?
Right. Yeah. For most of the time the gig companies have existed, their drivers have been classified as independent contractors, which means they have a lot of freedom in when they show up and when they don't show up. But it also means the companies don't have to pay them as many benefits, overtime, minimum wage, healthcare benefits, whatnot. And so the sort of standard Democratic Party position has been we want to shift more of the economics from the companies to the workers. And so back in 2019, Kamala Harris, when she ran for president, said she supported some California legislation that would basically shift some economics from the companies to the workers, from the drivers. So if she were to kind of win the election and stick with that position, that would be a bit of an issue for the gig companies. Do
you see that kind of threat on the horizon, generally speaking?
Well, she'll get a lot of pressure from Democrats in Congress. I don't know whether she's going to follow through on it or not. I sort of doubt it's anywhere near the top of her priority list. In fact, if I had to guess, I would guess she probably doesn't have her Labor Department aggressively pursue this issue through lawsuits against the gig companies. But I know that it's going to be something the companies are going to be on top of. And you can almost say sometimes the threat of regulation is regulation. If the companies know that this is a possibility, that the Labor Department might try to do something, companies have a way of sort of internally adjusting and shifting some economics to the drivers.
Let's shift to some of the kind of Mag 7 type names, the big internet platforms they're reporting this week. Why do you think that Trump would be materially better for that group than Harris would be? And while you say she would be better still than Biden, and how could anyone be better than Biden when these stocks are up, hundreds of percentages in recent years, all of the DOJ investigations notwithstanding?
Yeah, I mean, it's sort of a but for. I mean, maybe it would have been up even more without some of the aggressive policy activity by Biden against them. But the way I think about it is Trump is instinctively deregulatory. And, for years, the big internet companies have been pushing a narrative in Washington that you want strong national champions like Amazon, Apple, Facebook, Google, et cetera, to beat China. And just recently, actually, former President Trump actually seemed to embrace that view. He was asked whether we should break up Google, which is something that the current DOJ is pushing for. And he said, no, we need a strong Google to beat China. And I put some weight on that statement because we kind of know that China is a big issue for President Trump if he gets reelected. And he really does view these 5 or 6 big U.S. tech companies as allies of his against China. That really changes how he treats them in Washington. And I think that was a pretty meaningful, positive set of comments from Trump.
Sure. And so others would say, look, these stocks compared to 2021, their performance has been less outstanding with the exception of NVIDIA, which brings us to what might happen in the semi space. Are the risks similar or opportunities similar for stocks like NVIDIA, regardless of who wins?
This is a trickier area to predict, honestly, Kelly, for me, than the internet companies because it's so personality driven. And again, as we've seen, at least with Trump, it's very transactional, the way he uses the different international policy levers like export controls. For example, years ago, he put ZTE, a big Chinese telecom company, on the entity list, mainly to get leverage over China to do a trade deal. And then he took him off the entity list when China did what he wanted. So there's going to be more volatility in export controls if Trump wins. I think the key thing is that if Trump wins, he's going to have some people around him that are going to say, look, Biden did a decent effort at doing export controls to slow down China on AI. But he didn't do enough. There's a huge gray market, and we in the Trump administration need to do more. And that's going to be a tough decision for Trump because that will affect the market in these stocks, but it would sort of give us a little bit more power over China. So he's going to have a tough call to make if he is back in the White House.
We should go, Paul, but is there anything? It's 10 p.m. on election night, and you're sitting at your Bloomberg screens at home or whatever might be happening, and you see the outcome or the way things are going. Is there an immediate gut move on the space that you cover, if it's Harris, if it's Trump, or if it's unclear?
I really think Trump has separated himself on the megacap tech companies from VP Harris. If he wins, I just instinctively feel a lot better for those companies over the next 4 or 5 years. Investors are going to have to get comfortable with random tweets and statements that sound pretty bad about some of these companies. But I think the policy instincts of Trump increasingly are to be as protective of them as possible, both for AI reasons and for beating China reasons.
All right, Paul, thank you so much for joining us. Appreciate your time today. Yeah. Paul Gallant with TD Cowen.